Okay, let's unpack this. Welcome to the deep dive. Today we're diving into, well, a really dynamic area of finance. It's this increasing demand for quick financial relief and, how traditional lending often falls short. We're going to explore a rapidly growing alternative. It offers something that sounds incredibly direct, online loans promising same-day cash, maybe up to $3,000, and sometimes even without that typical credit check. This could be a real game changer for emergencies, unexpected bills, or just, getting some extra breathing room.
Yeah, and what's fascinating here is just how common that frustration is, the one with the established banks and credit unions. A lot of people, they really hit significant barriers when they need cash quickly, especially if they have maybe a limited credit history or what gets called bad credit. So our mission today really is to understand the mechanics and the implications of these online alternatives. How do they actually work outside those rigid traditional rules?
That's right, because when you look at traditional banks, the lenders, they often have very specific requirements. High credit scores, for
Yeah.
one, and tons of paperwork, right? And approval processes that can just take forever. So for people with, say, a less than perfect score or maybe no real credit history built up yet, these normal paths can feel totally blocked off, which is a huge problem when you need money now.
And that specific challenge, it really points to a much bigger issue, doesn't it? Financial access, inclusion. See, traditional lending, it relies heavily on these, well, pretty conservative risk models. They often default to just looking at your past credit score. And while that's meant to protect the lender, sure, it does inadvertently shut out a large chunk of the population.
Mm.
People who might actually have a stable income, they could repay, but they just don't tick those specific historical boxes. It leaves a lot of folks feeling left out.
But okay, here's where it gets really interesting. There's this whole other part of the lending world, these online lenders. If we take a platform like, say, 15mfinance.org as an example, you can see how some of them are stepping in. They're offering quicker, uh, less rigid loan options, often without those strict credit requirements that has always been such a barrier. So I guess the big question is, how does this online model actually work?
Well, the core idea is really a deliberate shift away from that old model.
Hmm.
Instead of only focusing on your past credit history, these online lenders, they're built for more, let's say, agility. They often prioritize your current ability to repay. So they look at things like consistent income, recent bank activity, that sort of thing, not just that old score. This lets them assess risk differently, maybe more dynamically. And it opens doors for people who might otherwise just be completely overlooked.
Right. And from what I understand, the process itself is designed to be incredibly quick and simple, like really simple. It often seems to boil down to just maybe three key steps to get your cash fast. First, you apply online. Usually just takes minutes. So using our example, you go to 15mfinance.org, fill out a pretty short application, definitely not those long forms we hate, and you submit it. And the key thing seems to be you don't need perfect credit just to apply. Second step, approvals can happen almost instantly, like really fast. Many applicants apparently get a decision within minutes, even with tricky credit histories. And then finally, the cash. It can actually arrive the same day. Once you're approved, the money can be in your bank account in just a few hours sometimes.
Yeah.
That's night and day compared to waiting days or weeks with a bank. But with that speed, how do they, ensure transparency? Is it all clear?
Well, the speed, compared to traditional methods, it mostly comes down to their use of streamlined digital processes and what we call alternative underwriting models. They use technology to quickly verify real-time financial info, like income, bank activity. This lets them assess your current situation without all the manual, paper-heavy, slow checks the old banks do. And regarding transparency, yeah, the reputable platforms, they really aim to make all the terms clear up front. Interest rates, repayment schedules, fees, if any. It's absolutely crucial, though, for you as the borrower to read all that carefully, really understand the full cost before you agree.
Okay, so you might be listening and thinking, right, but who actually qualifies? Is this too good to be true? But nope. From what we've seen, the qualifications are usually pretty straightforward. You generally need to be 18 or older, have a steady income source, and this is interesting, it can often include side hustles or gig work, not just a traditional job, and you need an active bank account. That's usually it. Typically, no collateral needed, no cosigner. And the big one, no credit check required, or at least not the traditional hard pull.
Yeah, that no credit check part, or often it's a soft check that doesn't impact your score, that's really significant. Bypasses one of the biggest traditional hurdles for so many people. By focusing on steady income and an active bank account, these lenders are basically looking at your current financial health, your cash flow right now, not just your past history. It shifts the focus from maybe past mistakes or just not having a credit history to showing you can actually handle the repayment now. That makes it a real option for many who felt shut out before. It is worth pointing out, though, um, because they are assessing risk differently, sometimes focusing on speed and accessibility, the interest rates might reflect that. They could be different, sometimes higher, than what someone with excellent credit might get from a traditional bank.
Right, that makes sense. So with various online lenders out there, platforms like 15mfinance.org, they tend to highlight a few key advantages common in this space. Things like lightning fast approvals, getting a decision in minutes, not days, the same day funding, which is obviously huge for emergencies, and as we've said, bad credit. No problem, because they focus on your ability to repay now, not just the score.
Yeah.
And they also emphasize being secure and trusted, compliant, safe, transparent. And apparently, thousands of people have already used services like this, covering emergencies, bills, maybe even just avoiding overdraft fees. So thinking bigger picture now, what's the real impact of having this kind of quick option readily available for these common money pressures?
Well, if we connect this to that bigger picture, having such a nimble and accessible option, it really does shift the landscape. It's quite significant. It means those unexpected expenses, a car repair, a medical bill, which maybe before could have started a spiral of late fees, or forced reliance on high-interest credit cards. Now, they can potentially be managed with a quick, targeted solution. So it raises an important question, right? How does this kind of flexibility affect someone's financial resilience, their planning? It really empowers people potentially to handle immediate needs without those often quite harsh consequences from traditional financial roadblocks. It changes the math for short-term money management.
So what does this all mean for you listening? It means understanding these online alternative loans. Using platforms like 15mfinance.org as a concrete example, it shows there's a financial tool out there designed for speed and access. We're talking funds up to $3,000, often without those traditional credit hurdles. The process seems deliberately straightforward, prioritizing speed and your current ability to repay, helping you get cash when you really need it fast.
Yeah, this deep dive, it really underscores the evolving nature of financial access. It's changing. It encourages all of us, really, to think about how these new tools broaden what's possible for managing our money in, well, a pretty dynamic world. And while the convenience and speed are obviously clear plus points, it also highlights, and this is crucial, the importance of personal responsibility. You really need to explore these options fully, understand the terms, how it fits your own financial picture. But as we get access to these faster, more flexible tools, it does make you wonder, doesn't it? How might the very definition of, say, financial agility expand, allowing for quicker, more decisive responses to those unexpected curveballs life throws at us? Ultimately, you can empower individuals in ways that, honestly, weren't really feasible just a few years